Hello there and welcome to this video. In this video I want to show you an up and coming Pipnotic product which has been in the works for quite a long time now and will be released here within the next couple of weeks. And the product is the Pipnotic currency strength histogram, and it is an attempt to demystify the use of currency strength information. Traditionally, using currency strength has proven to be a difficult task for many people, and so I wanted to take the information and present it visually in a way that can easily be understood and used in trading. And so the indicator is showing up at the bottom of the chart here. We have two lines. We have the top line, the orange line, which is the Australian dollar, and we have the green line here, which is the American dollar. And what we can see here is we're actually seeing an Australian dollar index and an American dollar index. If you go to a pound chart, we are seeing a British pound indexed and the American dollar index, and the same for all of the other currencies. So if you go to the euro, Japanese yen, this is an index of the Japanese yen, and this is an index of the euro. And so we can see how the Japanese yen and the euro are performing in relation to each other across the board. So what we are actually seeing is a very, very big amount of information presented simply in this small graphic. And so what I've also done is I have added a histogram. And the histogram simply shows us the difference between the strength of one currency in relation to the other. And so you can see here that we have the American dollar is indeed stronger than the Australian dollar, but you can see this strength, or this advantage in strength, is declining. You can see that we have actually higher lows here. So we have the strength of the dollar is going down in relation to the strength of the Australian dollar. And you can actually see that the lows of the Aussie here, they're roughly the same. But the strength of the American dollar is really going down. And so we want to see the same thing appearing here. And you can see this in a price chart where we have a low, a high, a low, a low. And we're having a very, very clear example of currency strength divergence on this chart. And the result was this nice move afterwards here. And so you don't simply buy when you see this. You have to wait until price has poked into an area of, in this case, demand, which it has done. We have this lovely probably daily demand just here. Price poked into it, so we're expecting price to go higher, and this simply confirms that. It tells us that yes, price is slowing down. We're seeing flows move into the Australian dollar and away from the American dollar for the short term, and this resulted in a nice move higher. We have the same thing happening just up here, how we have a high and we have a higher high, and here we have a high and we have only a slightly higher high here. And then you can see that again we were selling into weekly supply here, and the liquidity to fill short orders overwhelmed the liquidity to buy short to fill buy orders here, and this drove price lower here. And so ultimately what you want to do is you want to be buying when you see this at demand, and you want to be selling when you see this at supply. Or if you want to look at it on more here and now, then you want to be selling when price is the histogram is below the line, and buying the instrument when the histogram is above. And what you can see here, you can see that this pair was moving lower into this demand. But you can see here when price started to come down here, the American dollar is actually getting weaker in relation to the Australian dollar, and this played out very nicely in price as price poked down into here, this area of demand, and then shot up north very aggressively. The beauty of it is it can be used on absolutely any time frame whatsoever. And so you can see here we have another example where price moved up into here, into some area of supply to the left, and we had a high and we had a lower high here. And so what you want to do is you want to position yourself short at an area of supply. The strength information in the currency strength histogram is showing you that you want to be selling. The supply and demand is showing you where you want to be selling. You want to be selling at the base of the candle prior to this green candle here, which is just here. So this was an incredible trade. And this was again after weekly supply had been established, and then price just moved lower, and you can see that it worked out very, very well. So there's a lot of situations of this happening here. We have a low, you can see that we have almost flat, slightly decreasing histogram lows here, which shows that the selling pressure for this currency pair is slowing down. Where is it slowing down? It's slowing down at weekly and daily demand that are nested. So this is a super good place to buy and a super good indication that price is likely going to move higher, which it did. So you're going to see this absolutely everywhere. You can go to the smaller time frames and you can see the same thing happening. We have a high, sorry, we have a low, we have a lower low, but we see the histogram is slowly moving higher. We have a low and we have a higher low just here, and so the same thing is happening again. And so what you can do is you can go, for example, onto the daily chart. You can position yourself in relation to the strength information on this chart, and you can take your entries on the 1 hour chart using either divergence or just trading vanilla supply and demand. So it's a tremendous tool, and I think that presenting the information in this way here will make it much easier to understand exactly what's going on behind the scenes. If we have a look at this one here, you can see that we had a similar thing going on here where we had a low and we had a lower low, and here we had a low in the histogram and a higher low, which tells us that we are running out of steam. And you have to ask yourself, well, where are we running out of steam? We're actually running out of steam at this hourly area of demand, just here. And so you want to position yourself to buy here, which is a tremendous place to buy. We had the first reaction, price moved above here, qualifying this as a nice area of demand. And in the meantime, price started to drift higher at this area of demand. So you would buy here and follow price higher. So it's I think it's a very useful tool, and it's going to be released probably within the next couple of weeks. And yeah, if you have any questions about it, please drop me a post on the Facebook page or write to me via Pipnotic. That's it. Have a lovely Easter, and we'll see you then. Bye bye.